Hello and welcome to Virtual Investor Conferences. My name is Greg Young, and on behalf of OTC Markets, we are very pleased you have joined us for our next live presentation from Luca Mining Corp. Please note, you can submit questions for the presenter in the box to the left of the slides. You can also view the company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Dan Barholden, Chief Executive Officer of Luca Mining Corp, which trades on the OTCQX Best Market under the symbol LUCMF and on the TSXV under the symbol LUCA. Welcome, Dan.
Thanks, Greg. Thanks for having me on. Pleasure to be here. My name's Dan Barnholden. I'm the CEO of Luca Mining. I'm in the role now for about 5 months, and prior to that, I had spent the previous 20 years as a mining-focused investment banker, having worked and financed some of the largest and most successful mining companies, particularly Mexican mining companies in Canada and around the world. And so I really have a good sense of what is required to build a company such as Luca. And I took the role because I saw all of the ingredients present here at Luca to be a wild success. And so 5 months in, I think that we've hit some pretty good milestones, and I'm happy to be in a position here to tell you about where we are and where we're headed. On the front page of our presentation, here you see 3 keywords, and these are really the 3 key pillars for value creation for Luca Mining. We've got 2 operating mines in Mexico that we are in the process of optimizing. One is a brand new mine. It's called Tahuehueto. It's in northwest Durango state. We're currently ramping that up. The other one is an older mine that we are currently rehabilitating, revitalizing. That's called Campo Morado, and it's in Guerrero state. Assuming we get that optimization piece right, and I have no reason to believe that we won't, we intend and we are investing heavily in exploration. And so that's the second pillar of value creation here, is very aggressive exploration plans. And we just recently hired a brand new exploration team to execute those exploration plans. Lastly, assuming we get that exploration piece right, and again, I have no reason to believe that we won't, there's ample opportunity to expand these assets very meaningfully from the current production profile to 2 or 3 times that organically from the footprint that we have currently at our asset base. So I'm going to jump right into the presentation giving that context. Of course, we have the forward-looking statements. And then here we are with a map of Mexico, and we believe that we are expert in the Mexican mining situation. We've got an outstanding team. We've got a head office in Mexico City. And again, we've got 2 operating mines. The first is Campo Morado. That's a VMS-style deposit. So that means that we produce zinc, copper, gold, silver, and a little bit of lead from that mine in Guerrero state. And then we have the Tahuehueto mine. And again, this is a brand new mine in northwest Durango. So 2 operating mines and a head office in Mexico City. We produce, as mentioned, we produce about half of our revenue from base metals and half of our revenue from precious metals. This puts us in an outstanding position, particularly given the current bull market that we're witnessing in, particularly in precious metals. Obviously, everyone knows where the gold price has gone, kicking up again about $30 today, so bumping up against all-time highs again. And then zinc is a little bit lesser known, but zinc has actually outperformed copper by about 10 to 15% year to date, and so we're very pleased to have a meaningful contribution from zinc, and of course copper and silver both have performed quite well year to date. So here's a bit of a snapshot of where we sit today. This year we're going to do about 60,000 ounces of gold equivalent production from our 2 mines. The all-in sustaining cost will be about $1,840. So with the gold price where it sits today, plenty of operating margin there to generate some real cash flow. We have de-risked operations, and what I mean by de-risked operations is that we don't have any of the risks present that normally derail emerging mining companies. No permitting risk. We are in production, fully permitted, and operating currently, and also no capital risk. All of the money that needs to be invested into these assets has been invested, and we believe that the current replacement value of the assets that we have would be in excess of $500 million for the current existing infrastructure and underground development for the two assets. We've got 2.5 million ounces gold equivalent resource, and that resource and our throughput has very meaningful upside. We are also cashed up. We, in September, raised $11.5 million Canadian at 45 cents Canadian. We've got the majority of that still in hand, and we are investing that money in some modest improvements to the assets, which we expect will have very large impact on where we're headed. So what's our plan? On the first day of Q4, October 1st, 2024, I put out a press release that talks a little bit about the 6 catalytic events that we are focused on through Q4 and into Q1 and beyond of 2025. Those key catalysts, I believe, are going to be the foundation and the building blocks for creating value for this company. So one, we have a ramp up at Campo Morado. Again, Campo Morado is our zinc mine, or VMS mine, polymetallic mine in Guerrero State. We, in July, hired a mining contractor. That mining contractor has a mandate to get us to 2,000 tons per day by the end of the year. The mill is capable of processing 2,400 tons per day, so get to 2,000 tons per day by the end of the year, and then ramp up consistently through 2025 to that 2,400 level. We're optimizing our mill at Campo Morado. We are working with Ausenco, the global mining consulting firm, to optimize our recoveries at that mill that I described. It's a mill that's about 15 years old, and we are investing to modernize and revitalize that mill, improve our recoveries from the ore that we process, and improve the payability of the product that we sell. We have exploration plans, vast potential for exploration success at Campo Morado. Really, no exploration work has been done on this project since it was sold to the owners that had it before us in 2011. This asset was sold for $410 million Canadian in 2011. The owners of it, Nearstar, they did virtually no exploration, and so we are intending to invest heavily in exploration at Campo Morado, starting in late 2024, early 2025. Over at Tahuehueto, again, that's our gold mine in northwest Durango State. We are ramping up to full production. We intend to commission this asset and declare commercial production sometime in early to mid-January. And then exploration. We have an ongoing drill campaign. In this particular case, first drilling at Tahuehueto since 2013. So very excited to be able to be back and drilling and daylighting some new results over the course of early 2025. The drilling is ongoing. We expect to have results late January, early February from that drilling effort. And lastly, at the corporate level, we restructured our debt in January of 2024. And we commenced repayments in October. We expect to repay that debt over the course of the next 18 months, or potentially even earlier, to be debt-free by, at the outside date, July of 2026. So what does that mean? If we are able to execute on those 6 pillars of value creation, what will we have? Who will we be? We'll have 2 fully permitted, producing, cash-flowing mines. Those mines will have very meaningful upside, both through the development side and the resource growth side. So we will be in a position to expand those assets meaningfully. We'll have a clean balance sheet. We'll be debt-free. And we will have 2 very aggressive drill campaigns ongoing. So I believe that company that I described right there will have a substantially greater market cap than the current. So we'll dive right into the assets here. Campo Morado. Again, it's a VMS-style deposit, which means that we produce zinc, copper, gold, silver, and a little bit of lead. Again, this project has a milling capacity of 2,400 tons per day. We are in the process of ramping up to that 2,400 tons per day. This year, we're going to do we're going to do in the range of 40,000 ounces gold equivalent production, 43,000 in that range. I believe that next year, 2025, we will be capable of producing 60 to 70,000 ounces gold equivalent at costs in and around the current cost structure, which is in this particular case about $1,800. I mentioned before that we are working with Ausenco. We are working on a project called the Campo Morado Improvement Project. We kicked this off in Q4 of 2023, and you can see that there was an immediate improvement in the copper recoveries. We went from the low 40s to the low 70s. That's a very substantial improvement in a very short period of time. This project continues to be ongoing. We're in phase 3 of the Campo Morado Improvement Project. This involves replacement of certain equipment, and most importantly, we're going to go from a 2 concentrate system of recoveries where we produce a zinc concentrate and a bulk copper concentrate. We're going to be moving to a 3 concentrate system whereby we produce a zinc concentrate, a dedicated copper concentrate, and then a bulk concentrate or a lead concentrate, which carries also the precious metals. What that will do is it will put us in a position to get more money for the concentrate that we produce, and we will recover more metals from the ore that we are treating at that mill. Moving on then to our exploration. Again, when this project was sold in 2011, the subsequent owners, the owners prior to us, did very little in the way of exploration. So we went back to the original owners and we got all of the technical data that they had generated on the exploration front. We got their mapping, we got their soil samples, we got their drilling data, gravity surveys, and so forth. And what we did with that data is we generated 38 high priority exploration targets. We further distilled that to a top 10. 4 of those targets, and you can see here in the middle picture, 4 of those targets are in our mining concession, which means that we don't have an extended permitting process to go ahead and get drilling. So early January, we will be able to go out and drill 4 of our top 10 targets. And that is where we expect to generate very exciting drill results in a very short period of time. So that's something to watch for that new exploration team that we've hired. Moving on to Tahuehueto, again, this is our brand new gold mine in northwest Durango state. This is a mine that has installed processing capacity of about 1,000 tons per day. Right now, we are in the process of ramping up to that capacity. Recently, we've been in a position to do 8, 9, even 1,000 tons per day. When we're able to do that consistently over the course of a couple of weeks and a couple of months, we will declare commercial production. So I'm expecting that to be something that happens early in January of 2025. At that production rate, we would be in a position to produce 30,000 ounces or more gold equivalent resource, again, at prices in the $1,800 range. So at those kind of margins, we would be in a position to generate between $20 and $30 million operating cash flow, which we will then invest into expansion and exploration. You can see it's a fairly mountainous terrain, but that actually works in our favor. We go in here at the 12 and 14 portal and at the 20 portal. We bring ore out. We process it at the crushing circuit into the processing plant, and then tails go down further into the valley. Why I like to show this particular picture is that it sets the stage for the next page, which you can see a crosscut of the mountain. We are mining currently at the Creston vein, which is on the left-hand side. We've done some exploration work on both sides of the mountain, and we believe that the veining that we have found on the left-hand side here and the veining that we see on the right-hand side is actually the same vein. So there's a massive opportunity for us to go out and drill what we call this highly prospective gap. We think that there's the potential to host a multi-million ounce gold deposit here, and it's our job to find it. You can see here on this lower photograph, you can see that we've outlined 14 known veins. The resource that we've defined thus far is only on 4 of those 14 known veins. So massive exploration potential. We're going to go drill along strike to depth and then step out and investigate some of the potential of these additional veins. So again, it's that same strategy here, the same pillars of value creation here for this company. It's optimize this project, then go out and explore, and then look at potential to expand. That's an overview and a snapshot of the assets. This is our corporate structure. We've got almost exactly 200 million shares outstanding. We trade on a Canadian dollar basis. We trade it sort of in the 50 to 55 cent range. That gives us a Canadian market cap of about 105 to 110 million dollars, about $80 million, 75 to 80 million dollars US. We've got about $4 million in cash on our balance sheet. We've also got some warrants outstanding, and those warrants are struck at 50 cents. They're in 2 major tranches of about 20 million apiece. Some due in April of 2025, the balance due in June of 2025. The expectation would be that when those warrants come in, we will use that warrant exercise proceeds to fully pay down our debt. So again, it accelerates that debt-free operating company situation from July of 2026, which is when our debt would be repaid according to the existing debt repayment schedule. We would like to accelerate that to July of 2025. Our debt is all to Trafigura. Trafigura is our off-taker. You can see that we've got $17.4 million, of which 5.8 is a zero coupon convertible, which converts at 35 cents. That's not due till 2027. So we don't have a scenario whereby that needs to be repaid for cash. And so the balance of that, about $11.5 million, is money that we will be looking to repay as quickly as possible. You can see here on our shareholder scenario, we've got 5% institutions. That's part of my mandate, is to try and grow that institutional shareholding. Public float is in the mid 50s. And then insiders and close associates own about 40% of this company. Lastly, on the team here, we've got a very strong board of directors. Dr. Neil O'Brien, legendary explorationist. He was Lucas Lundine's right-hand man as Lucas built Lundine Mining. Very experienced explorationist, guiding the head of our technical committee, working with the exploration team that we've just hired. Phil Brummett, also a former Lundine Mining guy, previously managed the Candelaria mine, which is a large Chilean open pit and underground copper mine. Ruben and Roberto, very well-connected Mexican businessmen. Ruben's brother is actually the CEO of the largest silver miner in the world. David Rhodes, an experienced financier out of London, founder of Endeavour Financial. And then Peter, also a London-based mining financier. And Rory is a securities lawyer based here in Vancouver. The team that we've put together, I'm very proud of. Myself, as mentioned, previous experience as an investment banker focused on the mining sector. Ramon grew up in Mexico. He's based in Miami, spends about half of his time back and forth to the assets in Mexico. Paul recently joined us, a very, very experienced explorationist, has millions of ounces of gold having been discovered by Paul. Armando is a Mexican mining guy, born on a mine, in fact, and spent his entire career in Mexico, so a very, very savvy operator. And then Lisa and Israel round out our finance team. So where are we going as a company? Again, it's back to that same philosophy of optimizing Campo Morado, really revitalizing that project, restoring it to a cash flowing scenario, ramping up at Tahuehueto, producing a very meaningful amount of gold, and then growing our cash flow, growing our production profile, growing cash flow. Assuming that we get there, and we would expect to be in a position to do 80 to 100,000 ounces gold equivalent next year, 2025, growing cash flow, exploring these assets, and then looking at opportunities to further expand. And then lastly, we recognize that with many of these small companies, bigger is better. So we would look at M&A potential. We are not fussy. We would be buyers or sellers. But I've made a commitment to shareholders that we will not be issuing any more stock on acquisitions or from Treasury with a share price under $1. So certainly not in the M&A game at this moment, but that is certainly something that is on our radar screen. So that's really it. That's the company. Excited to have had the opportunity here, and so I'm going to answer some questions. The first one is initiatives to reduce our all-in sustaining costs, and the answer is, of course, yes. We would very much like to drive that down. We think that the industry average is in kind of the range of $1,600 to $1,800 per ounce. We think that there is probably 5 to 10% that we can drive down. Obviously, we are contract mining, which adds about 10% to our mining cost. We don't have an intention to go to owner-operator at this time. We just don't have the capital available. But we think that there are efficiencies that will allow us to bring those costs down. Kind of 5 to 10% is the goal. We had some management meetings earlier this week, and I believe that there's potential to reduce those AISCs by about 5 to 10% over the course of the next 12 to 24 months. Next question is why do we have the need for exploration? Really, I guess the need for exploration comes. I would like to improve our grade, and I've given our VP of exploration a bit of a mandate to double our resource and double our grade. And so obviously the mining equation is grade times tons moved times recovery. So as I've mentioned here, we've got initiatives to improve our throughput. We've got initiatives to improve our recoveries. And so lastly, I have now an initiative to improve our grade that we process. That will improve overall our cash flow. So the purpose of exploration is really to extend our mine lives and also to improve our grades. Production goals for 2025. I think I've answered that question, but I think that the goal is 80 to 100,000 ounces. I believe that Campo Morado can do probably in excess of 70,000 ounces, and then on Tahuehueto, I believe that 30,000 ounces is a reasonable goal there. Just looking at a couple of other questions here. I don't see any further questions here. Oh, can you reflect a bit more on accelerating the debt repayment by 1 year? Certainly. So I think that I outlined really the plans. We do have a big warrant position that I would expect to come in over the course of the next 6 months. Those warrants, the use of proceeds for those warrants will be absolutely just to pay down the debt. And so the goal, again, is to be debt-free by July of 2025. That'll be paid down from operating cash flow as well as from those warrants that are going to be exercised over the course of the next 4 months. I don't see any further questions. So with that, I think that I will end here and thank everybody for tuning in. Appreciate the questions. Again, Dan Barnholden. Feel free to get in touch with me at dbarnholden@lucamining.com.